thank you for joining us. I'm Marlon Bowling with you as we watch your ag commodity trade here on the Market Day Report. We're going to visit now with Brian Hoops. He is the president of Midwest Market Solutions in Springfield, Missouri. He joins us right now. So, Brian, thanks for being a part of the show here. As we take a look here at the grain market, first of all, let's take a look at our corn trade in Chicago. We've had a weaker tone here all morning long. We have the December corn now 3.5 lower at 347.5. So we're just 2 ticks from our low of the day now. We're getting further away from our high. We had a high of 351 in that overnight trade. let's go to the soybeans, where we have the September down 2.5, and November also 2.5 lower at 938 3/4 right now. So it's kind of in the middle of the trading range here in the soybean market for the time being. On the wheat trade in Chicago, we have the September contract there now 1.5 lower, while December down 2.5 at 425.5. On the Kansas City market, here you have the December contract down 4.25. A little more pressure in Kansas City than what we're seeing in Chicago. We're now trading at 421.25 on December. And in Minneapolis spring wheat trade, we have December now down 5.25 at 659. The cotton market as well, we'll throw that in there. It's been lower in the early going, and then it turned around and went higher again. So another day of upward movement in the cotton. December now 40 points higher at 70.23, now just 1 point off of our high of the day. So let's go back to Brian. And Brian, on this grain market that we are seeing right now, I keep hearing more and more stories about I guess, burdensome global supplies of corn, and I keep talking with analysts about the fact that there's a lot of corn that they think has to come to town yet, and a lot of the buyers know that, I guess.
Yeah, that's exactly what's weighing on the corn market. You look at corn and Chicago, Kansas City wheat. Both of those commodities, all three of those commodities are burdensome supply type markets, meaning that, this spring and summer when we did have some rally attempts, it was because of concerns about the supply of the market, especially Minneapolis wheat. And now that those concerns have alleviated, for the most part, we are seeing a lot of pressure against corn. Chicago wheat, Kansas City wheat, contract lows scored in all three of those markets. And it's going to be tough to really change this trend of the market. I do expect that once we get into deliveries and see heavy deliveries and get a lot of the old crop corn merchandise into the system, that will eventually put the low in the market, and we can see a recovery from there. But in the next couple of days, I do expect lower prices until we get into that delivery time frame.
Okay, now for the soybean side here, I don't believe there is as much in the way of soybean inventory left on the farm from what I understand, but how do guys market soybean futures when you have prices like this? And now we're almost done with the month of August when you have that critical pod filling time. If we can come through August unscathed, what else do we have to hang our hat on? Just a frost or a freeze scare?
Really, the only thing you have is a frost scare. And about the first week of September is when they're talking about a killing frost. At least one forecaster is talking about temperatures as far south as Des Moines, Iowa, being near record low type of conditions in September 6th and 7th when we have the full moon. So that is when you could see a frost. And if we have some frost damage, that should be enough to send prices sharply higher and give producers one last opportunity to do some marketing before they start harvest.
All right, so keep that in mind. The next full moon, I haven't heard that mentioned in a while, but that is something that I know traders used to really watch an awful lot. And a lot of times that can have an impact on the weather as well. All right, Brian, we're going to pause for a little break. And when we come back, I want to talk with you about some of the other markets, the livestock, for example. We'll talk more with Brian Hoops of Midwest Market Solutions when we come back. And don't forget, USDA did report a couple overnight export sales this morning before the trade opened up for the daytime session. I wanted to share those with you before we get further into the program here. Kind of interesting. We had one sale of corn and we had one sale of soybeans overnight. Actually, what they released was 226,000 tons of corn that was sold to Mexico for the 2017 and 2018 year. And also we had 198,000 tons of soybeans that were sold to China for the same same new crop marketing year there. Didn't seem to have much impact on the trade, though, as that news seemed to go totally ignored with pressure here in the corn and soybean markets. By the way, we had crop conditions yesterday that showed the national corn condition was unchanged, and we had soybeans up 1 percentage point, up to 61%. Good to excellent yesterday. All right, let's go back to Brian Hoops. He is with Midwest Market Solutions in Springfield, Missouri. I want to get your thoughts on the livestock trade here today, Brian. And on the live cattle trade, we opened up a firmer and didn't last very long, and it turned around and it switched by about $1.50 and went to the downside. So let's pull up our current quotes here and see where the live cattle board now stands. October currently $1.03 lower at 107.35. That's exactly $1.50 off our earlier high. We're only about 30 cents now from our low of the day. December in there 83 cents lower now at 110.55. Now, if you look at the feeder cattle market on the feeders, we have September down $1.10 at 144.78. October down $1.50 at 144.90. Remember, the August goes off the board here on Thursday. So all the other contracts now showing triple-digit losses here in the feeder cattle market. That's been about a $2.50 turnaround here or so in the feeder cattle trade. So, Brian, what do you read into that market action you're seeing so far this morning?
Well, we had just a one-day rally in the cattle, basically, after the cattle on feed report. And, you want to remember in this report that it wasn't as bearish as what it was expected, but it certainly wasn't a bullish report either. You've had the fourth largest on-feed numbers in history released last Friday. So it's not anything that producers should get excited about a change in trend coming. I think you've had these rallies in the cattle market where it's 1 or 2 days, and then the cattle market sells back off. And I look for that to happen again. I don't think we've seen our bottom yet. The bigger supplies are still coming at this market. And if you watch the weekly cattle weights, they continue to creep up. And so that means we're putting even more poundage on the market here that we're going to have to absorb in the third and into the fourth quarters when demand normally starts to slow down as we get past the Labor Day holiday.
Now, the lean hogs were under pressure right out of the gate this morning, the way it seemed. It's been about a 2-week free fall here. Remember, we had the October lean hogs not that long ago, about a week and a half ago. We're up at, I believe, 71.30, and here we are at 60.72 now. That's down 90 cents on the day, and we have December $1 lower at 56.58. Are they going to be able to finally get some sort of traction here anytime soon, or do you think it's another leg down yet?
Yeah, I'd certainly like to think they're going to find some support in here. From a seasonal standpoint, we do start to rally during late August and into and through the month of September. So it's from a seasonal standpoint, we should be putting in a low, but it looks to be like some sort of a spike low because we are trending so much lower here at such a rapid pace. We are holding a huge discount to the index. That's up around that $86 to $87 mark. And so it's a big discount. I'm surprised that the trade really wants to sell so aggressively this discount. I think it's going to close to coming to an end.
All right, Brian, thanks for all the insights into the markets. Good to have you with us once again. Brian Hoops happens to be the president of Midwest Market Solutions in Springfield, Missouri. And Janet, that's the latest. The hog market still not turning around yet. Not showing signs of strengthening at all. In fact, weakening a little more.
All right. Well, thank you once again for the rundown.
There you go.